All right, so we're back and ready for another deep dive, this time into the Singapore stock market. It's Monday morning here, and, well, the news is already buzzing with some pretty interesting updates.
It is quite a lively start to the week.
Yeah, for sure.
Yeah.
We're going to focus on four companies today: Genting, City Development, Keppel REIT, and Oxley Holdings. And trust me, there's a lot to unpack.
Yeah, each of these companies offers a unique glimpse into a different corner of the Singaporean economy. So it's kind of like getting a snapshot of the market in action.
Perfect. So let's jump right in. First up is Genting. Now, anyone who follows the casino scene knows that Genting owns Resorts World Sentosa.
A major player here in Singapore.
Absolutely.
Yeah.
But their chief casino operator just stepped down. And there are a lot of rumors swirling around this. Apparently, it might be tied to accusations of something called high roller poaching from their rival Marina Bay Sands.
Ah, yes, the high roller poaching. It's essentially a battle among casinos to attract and retain the most profitable gamblers, the ones who wager really big. And it can get pretty intense with everything from private jet offers to exclusive perks being thrown around. It's a high-stakes game in itself.
So you're saying that there's a chance that Genting might have been trying to lure high rollers away from Marina Bay Sands.
Well, that's what the accusations suggest. But whether or not there's any truth to them remains to be seen.
So this whole situation, regardless of its validity, really shines a light on just how fierce the competition is within Singapore's casino industry.
Absolutely.
So what does all of this mean for Genting going forward?
Well, for starters, investors will be watching very closely to see how this leadership change impacts the company's overall performance. Can they maintain their appeal to those high rollers? Or will Marina Bay Sands start to gain an edge? And it's important to remember that Resorts World Sentosa is a major tourist attraction as well. So any shakeup at the top there, it could have ripple effects beyond just the casino itself.
All right, so we're talking potential reputational damage, leadership uncertainty, and possible implications for the tourism industry as well.
Exactly.
Definitely a lot to keep an eye on there. But for now, let's move on to City Development. Often referred to as CDL, they just announced a major move. They're acquiring a 51% stake in a massive mixed-use development project in Shanghai.
This is a pretty bold move by CDL, and it really demonstrates their commitment to growth. They're clearly looking to expand their presence in China, and they're banking on the continued strength of the Shanghai property market.
Yeah, 51% stake is a significant investment. But also reading here that this acquisition has increased their debt quite a bit. Something called net gearing is projected to be around 72.5%. Now, that sounds a little risky, doesn't it?
Well, it's definitely something that raises some eyebrows. To put it simply, net gearing is a way to measure a company's debt relative to its equity. Think of it like your personal debt-to-income ratio. A higher net gearing means that the company has more debt compared to its assets, and this can signal potential financial risks.
So is CDL playing with fire here?
It's a calculated gamble, that's for sure. They're betting that the returns they'll get from this Shanghai project will be substantial enough to outweigh the costs of taking on more debt. It's a strategy that demands very careful monitoring, though, especially when you consider the dynamic and sometimes unpredictable nature of the Chinese property market.
All right, next up we have Keppel REIT, which stands for Real Estate Investment Trust. Now, they've been having a bit of a rough go of it lately. Their stock price has been dipping. And to add to that, their current CEO is stepping down at the end of next year.
It's true, Keppel REIT has faced some challenges recently, but what's particularly interesting about this leadership transition is that their incoming CEO has a very specific background. He comes from the world of mergers and acquisitions.
So you're talking about Chua Sian Yang,
Right.
Their current managing director of M&A.
Exactly. This background suggests that Keppel REIT might be preparing for a period of significant change.
Like what kinds of change?
Well, it could involve strategic acquisitions to boost their portfolio, or maybe even divesting some underperforming assets to streamline their operations.
So this new CEO could be the shakeup they need to kind of get back on track and attract investors again.
It's certainly a possibility. Mr. Yang's expertise in mergers and acquisitions could bring a fresh perspective, and maybe even a bolder approach to Keppel REIT's overall strategy. The big question on everyone's mind is, what direction will he choose to go in? Will he focus on growth through acquisitions, or will he prioritize consolidation and efficiency? Only time will tell, but this is definitely a development that warrants close attention.
Fascinating. Okay, let's move on to our final company for today, Oxley Holdings, and this one is straight out of a legal thriller.
It certainly has all the elements of a gripping drama.
So the story starts with Oxley Holdings CEO, Ching Chiat Kuang. he found himself under investigation in Italy for alleged involvement in a corruption case.
Yes, that made headlines a while back.
But if I remember correctly, weren't the charges eventually dropped?
That's right. No charges were ever actually filed against Mr. Kwong. However, that's not where the story ends. Mr. Kwong is now fighting back against the individual who made the initial accusations. He's claiming slander and extortion. It's a classic he said situation, with both sides vehemently defending their positions.
Wow, talk about a plot twist. So how does all of this legal drama affect Oxley Holdings and its investors, for that matter?
Well, anytime you have a public legal battle that involves a company's CEO, it inevitably creates a cloud of uncertainty. Investors tend to get nervous. They start to wonder how this might impact the company's reputation and operations. The key for Oxley Holdings now is to navigate the situation with transparency, and they need to try to maintain a clear separation between the legal proceedings and their core business activities.
It sounds like they're walking a tightrope. Before we get too caught up in the specifics of these individual cases, I think it's time to take a step back and consider the broader picture.
Absolutely. These four companies, with their unique stories and challenges, they really offer us a fascinating glimpse into the complex dynamics of the Singapore stock market as a whole. And there's a lot more to unpack there, from broader market trends to potential risks and opportunities for investors.
Well, that's what we're here for. So let's take a quick break, and when we come back, we'll delve deeper into those broader market implications.
That's good.
Okay, so we've taken a closer look at those four companies and their individual stories. But like you said, there's always a bigger picture to consider. So let's zoom out a bit and look at the overall health of the Singapore stock market. What do you think these stories tell us?
Well, that's a great question. And like with most things in the market, the answer isn't always clear-cut. There are definitely some signs of strength, but also some things to be cautious about.
So it's a bit of a mixed bag.
Exactly.
Can you give us some examples?
Sure, let's start with the positive side. We have companies like Citty Development making these bold moves for expansion, which tells us there's still a good level of confidence in the market. Their willingness to take on debt for that Shanghai project suggests that they believe the potential returns will be worth it.
So some players are still optimistic about growth.
Absolutely. But then, on the flip side, you have situations like Genting Sing. With these potential scandals and leadership changes, these things could indicate that there are underlying challenges within certain sectors. It's a good reminder that even in a generally strong market, there are always going to be some industries that are facing headwinds.
That makes sense. And we can't forget Keppel REIT's recent struggles either. Their stock price dipping and the CEO stepping down. Does that make you concerned about the broader REIT market?
It's definitely something to keep an eye on. The REIT market has been particularly sensitive to rising interest rates, which can definitely have an impact on their profitability. So while there might be some REITs that are performing well, others could be feeling the pressure.
All right, so we've got these mixed signals, but are there any specific warning signs that investors should be paying attention to right now, beyond what we've already discussed?
I think there are a few key factors to keep in mind. First, global economic trends always play a huge role in Singapore's economic health. It's a major trading hub, so any slowdown in major economies like the US or China will likely have ripple effects here.
So staying updated on global news is crucial.
Absolutely. Secondly, the political landscape, both domestically and internationally, can also impact market sentiment. While Singapore does have a stable political environment, any unforeseen changes could create uncertainty and affect investor confidence.
Right, so political stability is definitely something that investors value.
For sure. And the third thing to watch closely is valuations, especially in sectors that have seen rapid growth, like the technology sector, for example. It's experienced impressive gains in recent years, but we have to make sure that those valuations are actually justified by underlying earnings and fundamentals.
In other words, don't just get caught up in the hype, actually look at the numbers.
Exactly. And lastly, don't underestimate the power of sentiment. Investor confidence can sometimes become a self-fulfilling prophecy. If enough people start feeling pessimistic, it can actually trigger a downturn, even if the underlying economic fundamentals are still strong.
So there's a lot to consider.
There is.
Global trends, politics, valuations, and even just general sentiment.
It's all interconnected.
And forms this very dynamic and complex market.
It does.
Now, before we move on to our final takeaways, are there any other companies or sectors that you think investors should be watching in the coming weeks? Aside from the four we talked about earlier, of course.
Well, given Singapore's position as a major financial hub, the banking sector is always one to keep an eye on. The performance of banks like DBS and UOB can often give us clues about the overall economic climate.
Right, they're often seen as kind of like bellwethers for the economy.
Exactly. And another sector that often reflects broader trends in international commerce is logistics and transportation. Companies like Singapore Airlines and PSA International are key players in those global trade flows, so their performance can offer valuable insights into the health of global trade as a whole.
So we've got the banks and logistics, plus the 4 companies that we deep dived into earlier. Anything else?
I think the key takeaway here is that the Singapore stock market is constantly changing. There are always going to be opportunities for investors who are willing to do their research, stay informed, and be able to adapt to changing conditions.
Yeah, it definitely sounds like there's a lot to keep in mind, but that's also what makes the market so fascinating, wouldn't you say?
Absolutely.
It's this constant kind of balancing act between risk and reward, and being informed is really the key to navigating it successfully.
I couldn't agree more. There are definitely opportunities out there in the Singapore stock market, but they're more likely to be found by those who are willing to put in the effort to really understand what's going on.
So as we wrap up our deep dive today, what would you say is the most important takeaway for our listeners?
I think it's this. Don't just skim the headlines. Go deeper. Try to understand the forces that are at play, whether it's a change in leadership or a major acquisition or even a legal battle like we saw with Oxley Holdings. There's always more to the story than what you initially see on the surface.
So it's about connecting the dots and seeing that bigger picture.
Exactly. Look at the individual companies, of course, but also consider those broader market trends, the global economic outlook, and even the political climate. All of these factors contribute to the complexity of the stock market.
That's a great point. It really is all interconnected. And staying informed is absolutely crucial for making smart investment decisions.
Couldn't have said it better myself.
Well, I know I've learned a lot from our conversation today. Thank you so much for guiding us through this deep dive into the Singapore stock market.
It's been my pleasure. I always enjoy exploring these market dynamics and sharing insights.
And to all of our listeners out there, thanks for joining us on this Monday morning for another deep dive. Remember that the market is constantly moving and evolving. But with careful research and a keen eye for trends, you can definitely navigate its complexities and hopefully find some great opportunities for success.
Happy investing, everyone.
And we'll see you next time for another deep dive.